You set some targets, didn't you, of 5% every year. Those were the midterm targets, 5% growth every year. How does this compare with your expectation for the overall market? Good morning.
Yeah. Hi, good morning. Thanks for having us. I mean, how this is, we expect clearly in the next phase of Siemens Healthineers after the first successful period we have had after the IPO, the more than 5% growth you talked about. And this is a mix of, on the one hand, continuous market share gains, but in addition, creating new markets with the offerings we have in digitalization, in artificial intelligence, in driving the adoption of robotics in minimally invasive surgery. Yeah, so it's a combination of share gains plus making new markets.
I was just looking at the spread of business that you have geographically, the Americas, Europe, Asia, in terms of the split. Can I ask you, if Elizabeth Warren came to power in the United States of America, she's promised to spend $20 trillion on healthcare. Is that a realistic proposition?
Well, I'm not sure. I think in the end, our business is driven by patient demand, by more and more diagnostic tests, by the need, by a growing population, by more and more chronic diseases, by patients who more and more act as consumers. Politics certainly plays a role, but in the end market is 7 billion people who want to have access to better care. Yeah? And that typically averages out. Yeah, we have the U.S. is an important market. China is our second biggest market. We are very positive also about the prospects in Europe. So we are a truly global player.
What is your outlook for China there? Because we try to understand what trade wars, slowdown, stimulus means for everybody. Make it come alive for me with Siemens Healthineers in terms of your growth trajectory for China.
Yeah, I mean, first of all, I mean, emerging markets, if that is the right term, actually contribute by more than 50% to our growth. Yeah, and China is certainly the most important market here. It is in some of our businesses already the biggest market we have, with very solid growth. We see a very vibrant new private segment in the market, yeah, of private healthcare providers, where we have strength. We have a lot of a strong local footprint in China. So that also, when it comes to the trade war, we have an impact. It has an impact. But it is in our case relatively limited here. So it's about a 30 million hit to the bottom line, which we had in the last year after mitigation. Okay. So it is not nice, but it is not jeopardizing our profit in a large magnitude here.
Bernd, obviously you got your checkbook out in the summertime. You did a deal on Corindus, and for our viewers, we want to know what your appetite is to do more deals. Is that the top priority, or is it organic growth?
It's a combination of both. And in the end, I mean, we have laid out a very clear strategy since the IPO where we want to go at driving precision medicine, driving the digitalization of healthcare, making therapies less invasive, and all what we do, whether it's organically or inorganic options, needs to cater to this strategy. Yeah? So it's not a question of appetite or not. It is more a question of whether it fits to our strategy. And I think the two larger acquisitions we have made with Corindus, where we go into the field of robotics, and with ECG management consultants, where we grow into becoming a holistic partner for healthcare providers, follow exactly that strategy.